When we originally got into real estate, the one thing that scared us the most was how are we going to find the capital to fund all of our deals, especially when we were a hard money lender? How are we going to fund these deals? And the one thing that we did find out is it wasn't as daunting as we thought. When we went out and we would go and talk to capital investors after capital investor after capital investor, surprisingly, even though we were in our 20s, we weren't wearing a suit and we didn't have proper, finance degrees, surprisingly, a lot of capital investors still said yes to us. Now, that didn't mean that they handed over their checkbook or gave us money right away, but it meant like, sure, if you bring me quality deals and quality opportunities, I'm happy to fund them. You're offering a good rate of return on a low LTV real estate project. Sounds like a no brainer. Bring me deals. And that's when we had that aha light bulb moment where as long as you have a good deal, and I mean a good deal, not an okay deal, good deal, a great deal, a awesome deal, then for the most part, you're always going to get capital to fund that thing.
Yeah, and that goes exactly the same for what we do inside real estate. We're operators of real estate. We go out and buy and operate all kinds of different assets, from self-storage to single family, Airbnbs, commercial, multifamily, you name it. But we can't raise capital unless we find really, really, really good deals. Because here's the thing, as you start to go through the deal and you build your pro formas and you start showing investor returns, nobody's going to want to do it. And one thing that we found out, and I'm going to jump right into it, the number one thing that we found out is you always want to intrinsically underwrite a deal without debt, without investor capital, and make sure that that deal works. And then from there, you're able to go out and find the capital because you're buying an intrinsically good deal.
Yeah, and I think that a lot of real estate investors and developers, when raising capital, they're just looking for anybody who's willing to give them money on that next deal in any increments. And to us, that was never really the case. To this day, after raising capital for 17, 18 plus years for our real estate deals and our private loans, we have a small amount of private lenders, but each one of those private lenders works great for our particular business. They have bigger pockets. There are also lenders that have a good amount of investable capital. Investable capital is a very good keyword to understand, because just because somebody has money that they want to invest doesn't mean that that's investable capital. There's a big difference. Investable capital is, hey, I have this money set aside in order to do investment transactions with. I don't need the dividend to live off of. I don't necessarily need the money right now, but I'm looking to grow this. And if I were you and you're out there trying to raise capital, you need to underwrite a capital investor just like you need to underwrite a deal. It's that important, because a good capital investor will bring you down just like, or good, I'm sorry, a good capital investor will make you successful, and a bad capital investor could really bring you down.
Yeah. And one of the first things that you can do, you might be sitting here saying, Jason, I don't even know where to begin to underwrite capital investors. Let's start by underwriting your own capital into your own deals. Most real estate investors that are getting involved in real estate have some sort of investable capital to the sidelines. So the first thing you want to do is, and this is what happens a lot of the times, is people go and say, I'm going to do this deal. And they just put their cash in the deal. And then they say, I put in 20 grand, I got back 25. Woohoo. No, we need to understand, what did that $5,000 mean against that $20,000? Because now you're building case studies that you can go out and show your investors. Nobody wants to invest in something that doesn't have a proof of concept. So you should respect and treat your capital the same exact way that you would treat your investors' capital, so you can show them how you've grown your own personal wealth, your family's wealth, how you've diligently and were fiscally responsible with your own capital to grow it, that they're they have the willingness to invest side by side with you and become a co-investor in one of your deals.
And that's really the only way to lend out or take on investor capital. Like, you have to treat that investor capital as a priority over to everything else you have in your life. That's the most important thing, not only to return the capital to them, but also to return your promised rate of return. to them. And I get it. Some deals potentially might not go as planned, but you got to, do what you can to make sure that you keep your word and you're giving that capital back to that capital investor based on the situation. And all of this, and we're going to keep talking about this, but all of this keeps going back to having good deals and good underwriting and good operations on the front end, because a bad deal will just down the road wipe out everything. Not only will you lose money and you lose time, but you could potentially risk your lender's capital and your lender relationship and your in essence, your your word to them, which is so important. Let me go back real quick to underwriting a capital investor, because I think that's important. Typically we'll use like the DISC personality type, and that's not to mean that I'm going to give the DISC personality type to a capital investor, but I think it's important to understand DISC personality types. So when you're talking and communicating with capital investors, kind of who they are. If they're a D, an I, an S, or a C, typically we like to raise capital from D's and S's, because D's are dominant personalities. Typically, they already own a business or they're successful in their business and they're very straight to the point. And as long as you communicate with them correctly, they know what they want and they're very easy and sophisticated to deal with. And then we have S's that might end up being a little bit more passive investors, but they are they're easy to work with. They're very likable. Typically they've got cash and they're just good kind of humans all around, and you take care of them, they'll take care of you. We do try to stay away from the I's and the C's. The I's are kind of the life of the party, the sales folks, and they're very easy to talk to, very cool to hang out with, but a lot of them that we found, they just don't have as much disposable capital. And then you have the C's that are a little bit more conservative engineer types. They try to overthink projects and things like that. And we're experts in the deals that we do, the loans that we lend on, the real estate projects that we develop. We're the experts on that. And we want someone who trusts us and who has faith in us in the project, and not necessarily micromanage us. So that's what works for us. That might not work for everybody, but we've seen kind of the most successful with co-investing, co-lending with investors that meet that profile.
Yeah. And you'll start to recognize in the DISC personality. We've done some other videos on these, and you can go through our YouTube channels and find them. Maybe we'll even post the links all throughout here to show you guys about the DISC personality, but you'll start applying that to every facet of your business, from employees to vendors, to capital investors, to whoever you're dealing with. You're going to find out that this DISC personality applies over and over again. Another thing that you want to do when you're raising capital, again, is make sure that you're able to explain to your capital investors why it's a good deal, but more importantly, how their money's secured. So for us, we invest with syndications, and our capital investors understand their security instrument. For Jason, they're investing in a note, so they get a first position lien. You want to be able to explain to your capital investor how their money is safe and secure. While there's no guarantees, you do want to show them how they're protected overall in the property. That is one of the biggest risks. And if you can mitigate the risks for them and knock down those barriers, eventually they will come and invest with someone who is having success and doing good deals.
And you might say, well, how do I find these capital investors? I have all these good deals, but I don't have any capital for them. And there's real no magic easy button, but capital investors are a lot closer to you than you might think. They might not be in your initial circle, but they will be in your secondary circle, meaning me to Ian is our initial circle, right? Ian might not want to invest in my deals, but somebody that Ian knows will probably want to invest in our deals. And that's the way you look at it, right? And when you're out there kind of communicating and building relationships and trying to network with folks, family members and friends or other folks that might be interested, we've always found that capital investors that understand real estate investing, private note investing, development, stuff like that, have always worked out great for us, because they already have a little bit of sophistication. They understand, and they understand quickly how good that particular deal is. I don't have to sell them on, hey, this is a good deal, let's co-invest or co-lend on this deal. They already kind of know that themselves. And again, if you have a project and you need $200,000 to fund it and it needs to close in 3 days, that's going to be hard to raise capital for. Like, you got to treat it like a full time job. Just like you're out there looking for deals, you got to be out there looking for capital over and over and over and over and over in order for the right time, and working with these capital investors. So when the right time and the right opportunity comes, they'll be comfortable to work with you. I want to end with setting proper expectations because I think that's important, right? You got to, your capital investors need to know what their returns are going to be, how often they're going to get payments, reporting, communication, exit plan, how they're going to get repaid, things that have to be thought through on the front end. What happens if a deal starts going sideways? How do you mitigate that? All of those things are common questions that a capital investor is going to have along the way.
Yep. And you can make it as simple or complicated as you want. Early on, it was real simple. We just kept a Google spreadsheet. Now, today, we have an investor platform where there's communications, all the documents are on there. Everything is done through their investor dashboard. And as we continue to grow in the technology space, that is an industry as a whole, those products are going to get cheaper and cheaper and cheaper. We use InvestNext. We'll put a link down in the show notes, and you guys can go on there and check it out. But things are getting more affordable on a daily basis. So figure out how you want to communicate with your investors. Tell them what your expectations are, and be transparent and communicative. We just had a fire in a 47 unit building, and we had to notify all of our investors what's happening in this process because it's scary. The last thing you want to do is have them see it on the news and call you up and say, "Hey, do you know our apartment building burned down? What are we doing about it?" We were out at the forefront communicating with them immediately what was going to happen, what our expectation of the process is, and what it means for their future dividends over the next few months as we resolve this issue.
If you like this content and would like us to do some more content similar to this and share all our experiences, we're happy to do so. Please smash that like button, please smash that subscribe button, and we'll see you guys on the next video.